When we first posted our plan for financial independence, we were definitely expecting some mixed reviews, but one question that we were not expecting was, what is investing? How do you invest?
As someone who's been reading personal finance books and blogs since I was 19, it never occurred to me that people might not know what it means to invest money.
And I only know about it really because of Mike, because we've known each other for so long, and even before we got married, he was already putting money into my IRA, which is adorable if you ask me.
Since investing is such a very complex subject, the best we can do is show you exactly how we invest our own money, so you can see exactly what we do.
Some things you should know before we start talking about where we invest our money, and that's that we are young, we have an average income, and we can handle the emotional roller coaster of our money going up and down in the stock market.
I guess you could say we have a very high risk tolerance. During the recession of 2008, we actually saw losses as much as $6,000 in a single week. But instead of panicking, we actually continued to invest and maxed out our retirement accounts every year during and after the crash.
So all the money that we invested during the recession has more than doubled, which makes up for the losses during it. So we kind of expect this cycle to continue for the rest of our lives. Sort of like 2 steps forward, 1 step back.
Except that people lose their freaking minds every time the stock market takes a step back. And that's why it's so important that you don't panic and that you keep investing regularly so that you can take advantage of the 2 steps forward. Otherwise you end up in this cycle of 1 step back, 1 step back, and you can never get ahead.
I'm not a child. These shoes have no traction. I can't even take a second step. All right, so enough about the why. Let's talk about how we actually invest our money every month. Who has our bank account information?
Since neither one of us have 401ks offered at work, that left us with the IRA, or the individual retirement account, which anybody with an income and a pulse can open. The difference between the two being taxes. On the Roth IRA, you pay taxes now. On the traditional IRA, you pay taxes later. We chose the Roth IRA. Right now, our retirement is actually pretty simple, with 2 Roth IRAs holding total stock market index funds, and we've got some cash, and we've got a taxable account for our early retirement, and we've got an investment property under contract.
Boom.
We've chosen Vanguard in all of these accounts to buy our funds because their fees are 75 to 95% less than their competitors.
No. All right, so then Vanguard is who actually has our bank account information, right?
Yes.
Okay, so now let's get to the good part. What companies do we actually invest in?
Well, investing in individual companies would be way too risky, even for us. So we have a few options that allow us to buy a bunch of companies at once with a bunch of other people, and those are called funds. Now there's a bunch of different types of funds, but we like index funds because they're low fee, and studies have shown that even the best mutual fund managers can't beat the market over the long term. Even Warren Buffett, who's widely considered to be the most successful investor of the 20th century and currently sits at the 4th richest person in the world, says that when he dies, he wants all his money put into a low-cost Vanguard index fund. So I guess if it's good enough for the richest man in the world,
It's good enough for us.
We've got it set up that Vanguard automatically pulls out enough to max out our 2 Roth IRAs every single month. And right now we have it investing in a total stock market index fund, which is basically buying a small part of 3,500 different companies. Warren Buffett likes 10% of your money to go to government bonds and 90% to go in the S&P 500, which invests in the top 500 companies in the US.
Sounds pretty boring.
Yeah, it actually is. That's kind of the point. When you try and time the market by buying at the low points or bet on individual companies, even if you win in the short term, it's hard to keep that up for decades at a time.
That's why we make small, regular investments every month, because we're not looking to get rich quick. They're bugs. Why did I do this? Why are you doing that? Stop.
Slowly but surely, step by step, we'll reach the top and one day achieve our goals.
Can't even take another step. You know, you could stop filming and come and help me. No, you're gonna, Michael? No. Stop, I'm gonna fall. Michael!